what are you making of the shillings since the central bank's MPC rate cut? At least it had more time yesterday to almost have that news sink in.
Yes, I think it's ultimately I think it will have an impact in terms of the exit of quite a number of the foreign investors who had placed investments in fixed income securities. But I think what you'll also notice is that the central bank reserves have actually been at quite high,
yes,
and that should help to shield some of the short-term volatility that you would expect to happen on the shilling. But I think the impact of the rate cut ultimately is going to have an impact on the performance of the shilling. But it's also important to note the fact that as long as our structure of our economy in terms of the balance between imports and exports remains quite wide.
Right.
That means on a long term the shilling still remains vulnerable.
Because one of the reasons the central bank was feeling confident enough to be able to cut rates some more is because the shilling has been so far very stable.
Yes.
Is that likely to continue?
Yes, as I said, the key factor really is about the balance between our imports and exports.
Yes.
You've actually seen on the crude oil prices at some point had actually declined quite a bit, and I think that you could see from the performance of the shilling that the demand was not as significant. But as we've seen crude oil prices moving up, that may have an impact on the long term. But as I said, as long as we need to, on a long-term basis, strengthen our export base to enable ourselves have a base for hard currency revenues. The other factor, of course, is also the diaspora remittances. Those have also been quite strong. So I think on the short term that has helped to shield the shilling.
And there's also this extensive mop-up activity that the CBK has been engaging in every single day. I think yesterday about $97 million again bought out from the market. Yes,
I think of the last 1 year actually the central bank has been very active, especially following the very drastic downturn in the shilling last year.
Yes.
The central bank has actually been very active in terms of mop-up activities whenever the need arises to be able to balance the performance of the shilling. I think that remains a very key variable that the central bank remains aware of, especially because of the impact that it would have on our economy.
Taking this a little further, some analysts say maybe the ideal central bank rate right now is about 10%, which means we have still about 300 basis points to cut.
Well, I think one of the factors, of course, is inflation.
Yes.
You've seen that a consistent decline in the level of inflation. But I think if you also look at the monetary policy statement by the central bank, I mean they are also very aware of other factors that could affect, that could result in a reversal. For instance, the remaining concern about the euro crisis, in terms of the global crisis, that remains a factor, and which is one of the key markets for our exports. So I think what the central bank is trying to do is to manage the process gradually, and therefore give themselves some leeway. If you look at the timing, for instance, now they're meeting after every 2 months. So maybe ultimately we get there, but I think it needs some time to be able to be convinced that the inflationary factors are no longer a threat.
All right. Let's move on to the Nairobi Securities Exchange, which appears to have been trading largely flat for the last 2 days or 3 days. What did you make of that, and what's driving this or not driving it?
I think after the wave of half-year earnings announcements last month, we were actually seeing a wave of consolidation in the market. If you look at the banking sector, for instance, we had fairly strong results across all the banks. And I think a lot of the activity in the month of August was actually driven by the earnings announcements. And I think this is a time when, maybe investors are a bit some investors are looking at profit taking, and also the market trying to consolidate the impact of some of the developments that we are seeing. A lot has been happening on the market, particularly also on the sidelines. We've seen the issues of the uncertainty last week about what happened in Mombasa. We've also seen some wave of unrest when you have strikes, and labor unrest. So there are quite a number of factors that I think the market is looking at before investors are certain about the trends, where the market would go.
And it seems everybody has a strike these days: the teachers, the doctors, even Kenya Airways employees. But let's talk about Kenya Airways. There's so much to talk about right now. This retrenchment exercise is costing it 800 million shillings, but overall it says it will be able to save about 1.2 billion shillings just from the wage bill every year.
Yes.
It's a double-edged sword because it doesn't look good. The optics of this are not appealing, but it's something you need to do as an airline.
Yes, I think that if you look at the expansion plans for the airline, of course, they've already started, the issue of several of the planes that they bought are starting to come in.
Yes.
But the key factor actually has been a very significantly rising wage bill.
Yes.
And that has remained a source of concern, especially because to some extent management doesn't have is more or less in a tight corner because of the unionizable base.
And the unions have been very aggressive.
Yeah, they've been very aggressive. So I think from what KQ have said, the issue is really about non-core operations. That is what they're looking at outsourcing to try and save on the costs. So I think it's a challenging issue, but I think it has to be addressed because at the end of the day, it's a profitable, it's a profit. It's a business, and it has to operate profitably. So I think that is the key concern that the airline is looking at to try and manage its operations efficiently.
Overall, I'm sure maybe a year from now we'll be talking about a different story when they do put out the end year results and you can see the impact or the savings this has achieved. But at this point, a lot of the employees and the public perception may be against it.
Yeah, of course, that obviously has an impact because loss of employment is actually obviously a very sensitive issue, and
yes.
it has ramifications across the economy and the social impact of it. And I think the comments by the airline regarding how the rate in terms of the growth of costs when compare that to the revenue, it means that ultimately, if that trend was to continue, you'd find yourselves in a significant reduction in terms of profit, and that would probably create an even worse situation. So I think it's a challenging situation, trying to balance the need to ensure that you also have employees, but also the fact that you have to also run a profitable business.
All right, let's move on to Safaricom, which is one of the most highly capitalized companies listed in the NSE. It is investing about $95 million in fiber optics. That is to put up another 2,300 kilometers. It already has about 600 kilometers of fiber. An investment that they say, Bob Collymore, the CEO, says is very necessary. Yes. Because you can't rely on voice anymore.
Yes, I think this is, again, ever since we saw the reduction in tariffs a few years ago, Safaricom has consistently communicated the fact that they need to diversify their revenue base. And data has been one of those. Yes. And I suppose that the idea is to leverage on the very high subscriber base to ensure that they are able to strengthen their footing in the data market. So the investment in the fiber optic cable is to enable them to do that. And I think it's just an affirmation of that desire to ensure that the revenue base is much more strongly diversified towards data.
And you can see why this investment is necessary. Data from the Communications of Kenya from 2 quarters ago puts almost 80% of Kenyans who access the internet do so on a Safaricom phone, on a Safaricom connection, let alone on mobile phones as a whole. 80% of the volumes are on Safaricom. Yes,
and you can see also, I think also the statistics also indicate that that Kenyans are also very internet savvy.
Yes.
And that would also mean that Safaricom is very keen on capturing this very growing segment of the market. So both from a business perspective, it's obviously something that is likely to bring benefits over the long term. So I think it's essential that they have to make that investment in order to ensure that they retain that client base and also grow and ensure that they benefit from any other products or related products that can be offered on the data platform.